My gosh. Okay, today's a very special day. I have ended my 14 trade losing streak, and I'm talking about 14 independent trading days where I have taken losses straight. All right. Finally, I feel like I've got my headway back. It's just been very difficult. Q2 for me in particular, right? I see a lot of traders out here killing it in Q2, and man, it's been rough for me. All right, but I want to go over this trade that I had from this morning and break down this buy trade off of Wednesday's low. All right, so I'm here in replay, of course. All right, I see TradingView has this new feature now where it will actually put the replay watermark on the screen. I think that's pretty cool. And I'm looking at Wednesday's low from 1 p.m. yesterday, and coming into the morning, it was around like 9:15. I actually was able to get up. That's been something I'm also working on. All right, waking up on time because I'm usually up very late. But I woke up around 9:15 and I saw that price had dipped below Wednesday's low. And since this was prior to market open, I just wanted to observe price and look for some areas of liquidity that we may try to run since the lows were taken already. And dropping down to the 15-minute, I noticed on S&P, all right, on the left, we had these relative equal highs here, and the fact that they were descending, right? So the high from 3 a.m. was looking down on the high at 7 a.m. All right, that was something that I really like to see. NASDAQ was a little bit more ugly over here, so I didn't really pay attention to wanting to trade that. When I'm looking for my liquidity pools that I'm trading up to, I prefer to trade the market that has the cleaner highs, right? The highs that make a little bit more sense in theory. Because these are descending, that means 7 a.m. did not run out the high on 3 a.m. like it did over here on NASDAQ, right? So if I draw out 3 a.m. on NASDAQ, do you see how 7 a.m. rated this liquidity? That lets me know, okay, on NASDAQ, there's really no liquidity over here from 3 a.m., right? It's already been ran out. But the traders over here on S&P that have these descending highs, that's, in theory, that's where I'd want to target, right? I would not want to look over here on NASDAQ and say, okay, I want to target this 7 a.m. high. That just doesn't make sense to me in theory. When you're talking about like, where's the liquidity, right? The liquidity's already been ran out. So that's why I'm looking at S&P, and that's why I traded that today. Okay, so after we got this run on liquidity, look at the time. Here's the 8:30 candle here, this bullish candle. And right here, this 8:45 candle, this is when I went down to the 5-minute. Okay, don't know why this thing is going so slow. But we had this little unicorn model, right? This little bullish breaker here. So you got this move down below liquidity. You have these two up close candles that pull back. We get a new lower low into a higher high. So there's your breakup structure. And I was looking to buy off of this bullish breaker. So let me just go to the next candle here, because I did get a range before the pullback. Where is the high at? Right here. So I took a fib retracement from the low of the move all the way to the high, and I noticed that the breaker itself was below the 50%. So I threw up a pending buy right on the down close candle here, and I'll make that a little bigger so you can see right here. And here's the thing, my stop loss, it could have went below the extreme, but that's 17 points on S&P. All right, I'm really trying to do better, guys. I'm trying to do better at having tighter stops because I'm missing out on so much because of how large my stops are. So in this situation, I ended up putting my stop below the previous swing low that was ran here, and I was able to get away with 9 points. I could have been stopped out right here. It's happened before, but I felt like 9 points was just a much better stop than going for, what was that, 16, right? 16, 17. And I was still, covering for this imbalance here, right? If price was to go into this imbalance, I was still underneath this candle's low. So there was a good chance that I could basically be still in the trade. My target was 3R, but because these equal highs were so close, I went ahead and held here about 3.5, right? To target those relative equal highs. And look at the timing of the entry. So if I just go to the next couple candles here, all right, right here, the entry was at 9:35, right? And I try not to take any trades before 9:30. So that just happened to work out really well for me. And if I just go ahead and hit the play, All right, price did go above those relative equal highs, and I did not stick around for the reversal. I just took my 3R and called it quits. All right, that was my trade for the day, and here is the recording.